Good morning, everyone, or actually good afternoon, everyone. Today is Wednesday. It's September 2nd. It's Jeff Zananeri's here with us. Welcome, Jeff. It's our midweek roundtable. And today we are going to have, again, a completely uncensored view of what's in our head and get into the trading action and so forth and so forth. Again, none of this is scripted, folks. We want to give you guys a raw view of what we're thinking and how we're seeing the market. But, Jeff, we've been getting some really good emails and we've been talking a lot, and you and I have a very complimentary view of how we look at the markets. And that comes undoubtedly from having hedge fund experience. But I want to ask you just a few quick questions before we get into the market today. Sure. I wanted to ask you, when did you personally, in your trading career, when did you have that aha moment? When did the switch go off about you? Well, specifically about not using the typical bottom picking, using momentum, buying stocks, making new highs instead of new. When did that 180-degree switch around? How did it happen? Tell us a little bit about that.
Hello, Roger. Nice to be with you.
Nice to be with you too.
I don't know if I had like a eureka moment, but I've been a trader, as you know, and as you've been for a couple of decades, right? And I'd like to say in my first 3 years of school was like 3 years of trading was like being in an MBA school or being a resident in a hospital, and you make every mistake under the sun and make some more. And you realize that if you just start like making incremental changes and cutting down on those mistakes. And I had a pen and a pad, and I had a chronicle or a diary of what trades I was in, why I got into them, why I got out of them. And I started to see a pattern with where I was losing. And the big thing, and it wasn't really a eureka moment, but when I started to like improve my process, was I started to realize the places that I really got hurt was when I tried to impose my will onto the market. When I took what I thought should be happening, and when I took things that upset me that were happening because of FOMO, because of, missing the trade or my own, whatever. When I took that out of it and I just saw things as they were, and I approached every day as a new trade and a new day and a new opportunity, I started to do a lot better. So a big thing was leaving, but not taking baggage in from yesterday, from the year before, from the quarter before into the new day. So we're in a new day. What's happening today? Where are we in the month? Where are we in the cycle? Where are people going long? Where are people going short? And to do that with clean and clear eyes has made all the difference. So when you don't know what you're doing and you're starting out and you're getting into this game, you make all those errors and you realize that you are your own worst enemy. You, in your mentality, are the one that's stopping yourself from getting to the promised land, from getting success, from being in winning trades, from putting on the correct trades. And a lot of people sabotage themselves too, in the sense that they'll fight what they're seeing. They'll fight what they're seeing because of that emotion. And we've had people write to us about that in the last couple of weeks. Like we were joking about Tesla, and I was like, okay, Tesla's down for these couple of days. And it might be a short here, actually. I don't know, because I have this monthly money flow thing and I'm looking at it. And today's actually a big day for that. But the point that I was making when we were talking about it then was that a lot of people that were shorting it through its like super ascendancy, they just couldn't rationalize that this company was growing the way it was, that it was getting a valuation that it was getting. They couldn't remove themselves from the trade, from the process. So once I learned how to remove myself, my biases, my own baggage, and just see things how they were and have a system, things really just improved for me.
Got it. So, well, some interesting takeaways from the story. It's interesting because you said it took you about 3 years to get to that point. Didn't take you 3 days, took you 3 years.
Took me 3 years to get to that point. Took me another like 2 or 3 years to really refine my process and to become like what I would call an expert. I'd say it took me about 7 or 8 years. And I'm talking like trading at like big institutions, 7 or 8 years being there and making money and, having millions of dollars under management. 7 or 8 years before I was like, yeah, I know what I'm doing. I know what I'm looking at. And then
It's
after that, it's just, you know what I'm saying? Then after that, it's just like you're constantly growing and
yeah, it's refinement and building on. Yeah.
refining your tool. But it took me about 3 years to stop being an amateur, and about 7 or 8 years to become like a full, like what I consider an expert in the
Took you
field.
about 3 years to build that objectivity, to stop being reactive and be in the now, in the present.
Fundamentals.
Yeah.
3 years to get the fundamentals.
Yeah.
And then another 4 years, I would say, like to become like what I would consider, an expert in the field.
Let me ask you this question. Run me through most professional traders, not all, because obviously I haven't talked to every professional trader out there, but most of the guys I talk to, they have a very specific set routine that they perform in order to get, like, when I wake up in the morning, the first thing I do is I look at the global markets, then I look at my sectors, then I look at my ETFs. I have a thing that I do, and it's obviously not 100% mechanical, but if you look at it, it's about the same thing almost every single day. Do you have a kind of a routine that you go through in the morning to get you ready for the next day, or for the morning, or for the trading session?
Oh, absolutely. I mean, I wake up, I barely sleep. So let me back it up even some more. So I've been an international trader, and I was trading Asia. I was trading Europe Open, Asia Close, which occurs like East Coast in the middle of our night. So I'd sleep like 4 or 5 hours, like a solid. I'd take naps for like an hour, but then I would sleep from like 1:30 in the morning. And this is when I was like a hardcore hedge fund trader, which was like the Navy SEALs of trading. And so I'd sleep from like 1:30 in the morning to like 6 in the morning, solid, right? So now I go to sleep probably around 11:30, but I wake up earlier now because I sleep from earlier. So I'm waking up at like 5:30. And the first thing I do is I go on my Bloomberg from my bed, from my iPhone, and I look at the futures. I look at where the futures are and where they are in relation to where the market closed the day before and what, the foreign markets are doing, and just check the major asset classes. Then, of course, I get through my routine, and I what's weird, and I talked to my wife about this the other day. My best thinking is in the morning. I don't know about if it's the same thing but for you, Roger, but like I'm really seeing what I want to do and strategizing and plotting out like my strategy for the day. Because I'm thinking about, okay, so here we are. Here's the futures. Here's where we're at. Here's the big news items of the day. Here's how I see the day playing itself out. I'm making all of those like calculations in the morning. And so from like 5:30 to 7, I'm plotting. I'm making my action plan, my whole like, what I'm going to do. And I said, if I can think this clearly, if I could have a pill where I could think as clearly as I do in the first hour and a half, the entire day, it would just be unbelievable.
Yeah, works the same thing for me. Exactly the same process. I think it has a lot to do with the fact that whenever the markets are open, my brain works in a certain way, like everything is moving. I kind of explained it to somebody once. I went to Universal Studio, and there's a thing where you're on a bus and you go inside this tunnel, and you're standing still, but the tunnel moves like this, and you feel like you're moving sideways. So I feel when the market is open, when the U.S. market is open, I feel like I'm in that tunnel partly.
Exactly.
But
Yeah.
before the market's open or after the market open, it's a completely different feeling. And I have that, and which is why I kind of enjoy taking a step back a little bit, because it gives me that clarity. Yeah.
Yeah.
But I have
like,
exactly the same thing.
yeah, it's like being in a sport, being in a game or something. Like all the preparation has to be done before the match starts, because then when you get to that point, like you have to execute. If this happens, then I'm doing this. If this happens in the market, then I'm doing that.
Right.
We used to have like, Fed Day is obviously a big day, right? And we would sit there, and it's usually like kind of a slow trading day, but like lunch is usually the slowest part of the day. So we'd sit there on the desk, and from like, Fed's like 2 o'clock to 3 o'clock. And we'd sit there and we'd be like, okay, here's the scenarios. Let's go through the scenarios, and let's go through what we're doing, what we're selling, and what we're buying before it happens. Because when it happens, you have to be firing. You can't be thinking. It's about action. It's about activity. It's not about strategy at that point. If you're
Absolutely.
strategizing during that, people like me and you are picking you off. You're getting picked off. So on a day-to-day level, that happens pre-market. So it's funny for me in this business, and I know you're the same. And I'm gonna guess something. A lot of people in our industry don't come from a heavy-duty finance background. So they're not morning people. And it's like, I'll start answering emails at like 6:30 in the morning and I'll start slacking people. You're on it. I see you. So I'm slacking you. I'll have conversations with you at like 7:15. Not everyone's like that. And I want to say to some people, I'm like, this is the finance game. This is an early bird game. This isn't like, advertising or something where you're out till midnight entertaining clients. Like the heavy lifting is done in the darkness, like pre-dawn hours. It's a morning game, right?
Big time. Absolutely. And I've always been a morning person, and I've always done my best work in the morning. I'm useless after 9 o'clock at night. And like some of our publisher, who you and I know very well, he would, I mean, that's like the perfect time for him to get creative. I'm more of a morning person. So, and I've always been that way ever since I was a child.
Me too. But this is a finance thing too, man. I mean, like you used to get to the office and everybody's sitting there and like have read the whole Wall Street Journal,
Yeah, this is definitely
2 hours before the market.
I used to get up at in LA. I used to trade the New York Commodity Exchange, which would start at 7:20 a.m., which would be 4:20 in LA. So I would wake up at 4 and I would be at the office by 4:30 every day. My office was just about 10 blocks from my house, so it was easy. It was an easy drive. But still, I know exactly what you're talking about. I lived on the New York time zone for many decades.
If you're in America, if you're in the United States or North America, you kind of have to. You kind of have to be. That's why Florida's so great. And Florida's always going to have like this natural like flow. I mean, like where I'm at in Miami, we're having a lot of, like New York hedge funds that have been just like leaving because of COVID and because of what's been happening with the city.
For other reasons. People are leaving New York, yes.
For many reasons, But I know, people are moving into my neighborhood, like buildings around us, like the commercial real estate stuff. Big name guys, big name hedge funds are moving to these places. But like one of the big draws, obviously, is, you're still in the same time zone. That's a big thing.
For those who don't know or realize this, folks, I'm telling you right now, working on the Pacific time zone and trading the market, especially when all your staff works on the East Coast and you have meetings, and it is very, very difficult. That's actually one of the reasons why I'm not going back there to visit. It's just hard on me. It's easy to go 3 hours ahead. It's hard to go 3 hours back. So it's
your whole life ends up like, that's what the thing is. People always ask me, they're like, do you like California? I'm like, love California. I mean, natural beauty wise, like probably the most beautiful part of the country.
Absolutely gorgeous, breathtaking.
Beautiful place, breathtaking, like blessed place, right?
Yeah.
But my whole life is East Coast, man. Like my career, my family, like it's here. Like it's just
totally
I-95 corridor, baby. I mean, it's not as pretty. It's not as this. It's not as that. Weather's not as good. It's fine. My life is built on the East Coast.
Totally. Hey, it's been over 2 years now, and I can't even fathom. It's completely moved over on this side. Let's move on a different topic. Let's talk about the markets. This is interesting because I know we've been getting a lot of questions about your background and so forth. So I thought this would be a good little way for people to get to know you a little better and kind of understand where you're coming from. And also this kind of the conversation I think we just had also kind of puts people's expectations or what they think, how long it takes to be a successful trader. I think this kind of gives people a different expectation because there's this thing on Wall Street where the average retail investor thinks they can become a professional trader in 2 weeks or a month. And it just doesn't work that way for most people. It's a process. Well,
you can be fooled by randomness, right? Like you could hit it right for a short period of time doing something. The big thing is, and I tell this to people all the time, is, okay, you made money doing something. Do you know why you made money doing it? And when they can't explain to me, like why they made money in that trade or why it worked the way it did, I know that they're very far from being able to reproduce the same results, and that invariably they're going to make a mistake because not knowing why is going to get them to try to replicate that same trade in a trap. And more times than not, they give back that's when it's casino action. They give back all their gains in one fell swoop. And no, there's a big difference between being a professional, and the biggest difference is consistency and understanding why and how you're making money rather than having it being random and being fooled into thinking that it's something that'll repeat itself just because it should.
Could not agree with you more. So Let's talk about now. Let's talk about the markets. What are
Yeah.
you seeing this week? What are you focused on? Tell me what you got behind those cards, and I'll tell you what I've got behind my cards.
So we've been on point, man. I hate like going back and like banging the same drum. So what's killing it, right? Like these stocks have exploded. Like these stocks that we've been telling people, you have to have some of these names. Not all of them maybe, but some of them. The DocuSigns, all these stay-at-home stocks, these tech heavyweights. People are clamoring for them. They're clamoring for them, right? So there's this like panic to be in them. So it's created a bit of a frenzy, and we're in that frenzied situation now. And I know you look at RSI, and I was looking at something with RSI today with the S&P's at 80 plus RSI, which is insane, like super stretched levels.
And diverging and momentum, everything is pointing to extremes.
And so there's panic happening in certain single stocks and in the markets in general to be long a lot of these names, which is typically the end. When you have panic on the bottom, it's kind of the end. When you have panic on the top and intermediately, it can be the end, right? So you have to be careful here. You have to be careful. And so my point of view is that this thing is happening. We knew it was going to happen. We predicted it was going to happen. We said that you're going to probably have some blow off top. I think we're in the midst of a blow off top in a lot of tech. And you're going to have another opportunity to buy those stocks, but I'm starting to see other sectors. You nailed a lot of the consumer discretionary. The staples have been amazing. And I think you need to start to look at some other places to put your money. And if you don't know how to be bearish, you got to learn how to be bearish because there's good things to be short right now. There's good countries to be short. Not every country is participating in this. If you don't know how to trade international ETFs, there's a lot of international ETFs to short where you can make money. A lot of people don't know this, but not everyone's having a massive bull market and like euphoric society. Just us.
I mean, I've been hollering on Spain. I've been really tough on Spain, but
nailed it.
You've got Spain. You've got
Brazil. I'm bearish on Brazil right now.
Thank you, Brazil. Yes, I was about to say Brazil, Spain. Just tons of foreign. They're not doing well at all with COVID. I mean,
yeah.
They're
Korea you talked about last week.
Yes. Yeah,
the most important technology index in all of Asia is Korea.
Yes, which is why it's very similar to the Nasdaq. Yeah. It's very similar. So yeah, we're seeing a lot of and emerging markets as well. There's been a lot of downside. And folks, for those of you who are listening, by the way, just so folks know, we post in our VIP members area. We rank every ETF in the world that has like over 30,000 average daily volume liquidity, from high to low in the database. So there's like 2,000 ETFs. So if you're in that program, guys, feel free to take a look at what Jeff and I are talking about right now. Yeah. But yeah, I'm seeing the freight shippers. I'm seeing the software I'm seeing the software as a service. Baird last week just renewed a strong buy on all the ServiceNow, the Adobe software as a service stocks. And they've been up 33% year to date on average. Yeah. S&P's up 3% year to date.
Yeah.
They said this can continue well into the end of 2021.
Oh, for sure.
So there's a lot of, I'm seeing a lot of upside in stocks that are not related to the hot tech stocks that have been sizzling up.
Well, my mentality is that I like those names, right, for the long run, but I'm a trader. So I'm looking at my risk in the short run and I'm like, okay, so people are panicking to be like, I don't panic with people. I take the other side of panic by nature. Like, I don't fight before the panic. So the trend is happening, but when the panic happens and then an extreme thing happens, then I have to start taking the other side of some of those trends because that's where people are sloppy. That's where a lot of amateurs are just, people are just not really thinking about price at all. They're very price agnostic. They're more like, I need to have a certain amount of money on today. And so I'm not price agnostic. Like price is everything to me. Price moves everything around me, to quote some kind of rapper. I think he said cash moves everything around me, but price is the most important thing. And so I'm seeing a reversal today in the NASDAQ, started bid, seeing a little bit of reversal. Tesla's been hit for a couple of days. That's obviously clearly one of the market leaders, but there's other leaders holding up. Still want to be careful in fading. Like I love the software names, like you said. I love those types of trades. The banks are starting to look alive today, Roger. You have the 10-year yields coming down, but there's an interesting phenomenon happening. The yield curve is steepening, which is really good for banks because banks borrow money, with short duration, so short periods of time. And I'm not talking to you. You know this stuff, just people that don't know.
Of
They
course.
borrow money with short duration, and then they lend it out for long duration. So when the yield curve goes steep, that means that the longer you go out in time, the much higher the yield is. So that spread is what banks make for profits. So you're seeing JP Morgan, you're seeing these stocks are bid today, even though yields are down because the curve is steepening, which for me is a very, that's been one of the sectors of value that I'm looking at. Oil is not a good one for me, in my opinion. Oil prices are getting hit. The dollar is reversing bigly today, which is why you're seeing some weakness in gold. Dollar strength.
I was about to say, you see, folks, we're on this. I was about to say, which is why you're seeing the weakness in gold. Yeah.
So
it's been rotating back and forth. Yeah.
So there's places to be short. I think you can be short base metal type of industrial type of stocks. I think you can be short countries that are commodity producing countries like Brazil. I'm bearish on Brazil. I put out a short position, a put position on Vale, which is one of the largest iron ore miners in the whole world. It got stretched. It got pulled up with the dollar weakness. Things to do. There's stuff to do.
Which, if you had to pick 3 bank stocks that you really like, that you think will have sustainability over the next couple of months, would you be willing to give us a few names that you're?
I like the brokers still and JP Morgan. So I like Morgan Stanley, Goldman Sachs, and JP Morgan. I hate Wells Fargo. Citi, I don't like. Bank of America, I'm kind of market neutral on.
Yeah.
They're okay, but they're not, I think that the brokers will again upside surprise in earnings because they love craziness. They love this mega bull in the NASDAQ. This is amazing for those guys.
Yeah,
they kill it on this stuff.
Right.
So,
and for those of you who are new to this, there's a big distinction between savings and loan style banks and investment style banks. So I want to make sure that people here understand we're not loving all banks. We like very specific banks. We like banks that invest money into other things like Goldman Sachs, Morgan Stanley, so forth.
What's happening right now in the stock market is it's historic in the sense that you have such a high degree of retail interest, which is great, which is what we're here for. Frankly, we're here to help equip the retail trader investor with institutional know-how and tools and to understand what they're looking at. But I've only seen a few times, and I've been in this game since the 90s. I've only seen a few times in my career this level of interest. And that invariably is a wonderful thing for the brokerage firms.
Well, and on that note, Jeff, one of the two, because of that, the 2 stocks that I gave a highlight on this week was NASDAQ and ICE.
Oh, great. Fantastic.
Because I think as we enter the end of summer, volume is just crazy. It's off the...
I was thinking about ICE the other day because you saw what happened in New Jersey the other day. The governor of New Jersey came out and threatened a bill to put a 25-cent stamp transaction charge on every trade that originates in the state of New Jersey.
They've been... I got to say, New Jersey's been really creative lately with their tax collection methods overall. But yeah,
Roger, 25 cents a share. Listen, they are, for people that don't know this, all the big server farms where the high frequency trading companies have their servers is like Weehawken, Jersey City, all these places in Jersey, right? And so these guys, their business model is predicated on making 2 to 5 cents a share. They're not going to pay out 25 cents to anybody. They're going to move those server farms to wherever.
Faster.
They'll move it to South Carolina. They'll move them to Ponte Vedra. They'll have them across the street from your office in Ponte Vedra before they pay 25 cents a share. The ICE is an amazing story because these guys started an exchange in Atlanta, Georgia.
Yeah.
This is the world we're living in right now. Disruption. Yeah. I love it. I love that.
So volume is just off the charts right now. I think we're going to see, because of gold and obvious commodities are a little, I think we may see a little rally next year. So I'm thinking a little bit ahead, but those were the 2 stocks that I recommended, NASDAQ
Love it.
and ICE. Now I want to tell you something else. And I'm shamefully, I never knew about this ETF. As you know, when markets get this overheated, I like to shift away from individual stocks to ETFs because your exposure is volatility is a little high and so forth. There's this ETF called CLIX, ticker symbol CLIX. Now get this, CLIX. It's screaming right now. It's a long short ETF, It has 100% exposure to online retail
Okay.
and 50% short on brick and mortar.
That's like a money link. That's like a money link arbitrage.
That's why I'm bringing it up here. I thought you and your readers and our readers would enjoy this. So the ticker symbol is CLIX,
Nice.
CLIX. Take a look at it, review it, but
you got to figure, you know what though, Roger? Like, this is the thing. This is where the art comes in, right? So Walmart came out and made an announcement yesterday. And so I've picked on Walmart for 10 years, but things have changed. They've changed their philosophy and they've changed their business model. And they came out yesterday and they rolled out an Amazon Prime type of service for Walmart where you become a member, you get free shipping, all for online, right? And so I'm sitting there and I'm like, why did it take these people so long to come up with this? But it doesn't matter. Better late than never, because now they're going to be on the 100% side of the ledger of that ETF rather than being in the funeral parlor with some of those businesses that don't adapt.
It's interesting that you mentioned that, which is, I think, very big for Walmart. And I think Walmart is going to change. Their online sales went through, they were 97% higher from a quarter. Yeah, very high. Target was 197. Walmart was 97% from last quarter. Yeah. But I believe, and I've been predicting this for years and I've been wrong and I've been saying exactly the same thing. Why is Walmart so far behind? But I think what Walmart is going to do, and this is just, I don't have any inside information. This is my opinion. I think they're going to invest in some companies like Hulu or I think they're going
TikTok. They're in the TikTok thing.
I think they're going to, because it's easier. They have the cash.
Yeah.
And they have their bond ratings are exemplary. I think they're going to buy a few companies. I wouldn't be surprised if you saw Walmart buy Roku or Hulu. I
and
think
it'll be hugely accretive deal to the whole business.
Yes.
Hugely. They'll get the multiple of that one business on their entire market cap. These are the times where you make these legendary moves, or like you're going to see some disaster trades too. You're going to see some takeovers that are just totally, remember, like not to get off on a tangent, but these are things to pay attention to and things to try to predict, because you had some trades go off in the late 90s where you're just
you mean like
Time Warner AOL.
I was about to say like Time Warner AOL. I was about to say like Time Warner AOL. What
right?
Talk about it. Folks, these people, just so you know, Time Warner spent billions of dollars buying AOL literally 3 months before Yahoo and all these search engines made everything that America Online has in their portal that people have to pay for 100% free and available for everyone. So yeah, I mean, you literally took I was going to say like Time Warner and AOL, which was probably gone down as the stupidest business decision.
But that happens in these kind of environments where there's panic. Like companies panic. It's not just retail traders panicking. Like CEOs are panicking. People are panicking. There's froth and there's panic, and it creates mistakes, which, you know, if you're paying attention, you can make a lot of money on.
There's going to be some doozies. There's going to be some doozies out there. Well, listen, I think we had an amazing session, probably our best yet so far. We went pretty deep. I love it.
Very good.
Thank you, Jeff. I really appreciate it. And folks, if you guys are enjoying this, if you want us to talk about a topic, if we were able to help you with a stock, anything, send us a love letter, send us a hate letter, reach out to us, Jeff@joyofthetrade.com and support@marketgeeks.com. Please feel free to reach out to us. We're there for you. We want to hear the good, the bad, and the ugly. All right.
Can I add one last plug? I never plug anything, but since today's the second day, it's the second day of the month. I have a really, really like amazing product that's super cheap called Monthly Money Flows. And I come out with a trade. It lasts 1 month. You put it on the third trading day of the month. You take it off on the last trading day of the month. It comes out tomorrow. So check out Monthly Money Flows like now, because my trade
is there a link
coming tonight. We're going to put the link in the email, but
beautiful. Love it. So folks, by the time you see this, you will see the link below. Please, please pay attention to this. Thank you for doing that. I appreciate it. They never tell me anything around here.
No, so, I don't normally plug. I don't want to make it like a, I like our conversations, but because it happens to be today and I do this trade once a month and the trade comes out tonight and you put it on before the market tomorrow, I figured, it's a good time to talk about it.
Perfect. Folks, please, please, please take advantage of this opportunity. You will not see it at this price again, Jeff is doing it simply for our viewers here. Thank you, Jeff. I had a great time, and
Thank you,
I
Roger.
will see you later this week, and I will see you next week for our midweek roundtable.
Loved it.
Bye. Take care.
Have a good week.
You too. Good morning.